is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to our man Jim in Palm Harbor. Hey, what's going on, brother?
Hey, how you guys doing today?
Doing great, man. How you been?
Oh, great. I really appreciate you and Tommy. You do a great job, great work, and I really appreciate it. I watch you every day.
Well, thank you so much. We appreciate you growling and prowling with us out here, man. Let's go to Sylvia in Tampa. Hey, Sylvia, how you doing?
Hey, Tom. Good morning. Thank you so much for taking my call. I want to tell you thank you so much for the advice you gave me on dust yesterday. I exited when you told me, and I made a healthy profit for a very short period. So thank you.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our 4 agreements. Manifest your true intentions. Regardless of what language you speak, your intent will be manifested through the word. What you dream, what you feel, and what you really are will be manifested through what? To what you say each and every day. Market-wise, let's take a look at it out here. We have the Dow Industrials up 60, NASDAQ down 66, S&P's off 6, gold contract up $3.90, trading at $12.0520 an ounce. Silver down 3 cents, $14.08 an ounce. Light sweet crude off 83 cents, $67.89 a barrel. Notes and bonds. You get the 10-year note up 7 ticks, 120.05. 30-year bond up a half a point, 16 ticks, 144.12. King dollar's down 136 ticks, trading at 94.988. The euro is trading at 116.25 to 1 US dollar. The yen is trading at 110.90 to 1 US dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&P, let's take a look at it. What do we have? Okay, so we get over and we take a look at the S&P. We'll start with the SPY. SPY yesterday, you get down with some volume. We did volume out here in the SPY yesterday of 72 million. We've done 44 million thus far. You've hit a low out here of price point of 287. You come back $1.50 off of that low. Now, if we take a look at this intraday, what you're going to see here is that you're making your way back topside. We'll see how it handles approximately this 288.62 number. Right now, we're about 10 cents away from it. I suspect that we're going to try to run up into that number. NDX 100 is the weakest index out here. This is down with volume, big time too. What you can expect as we're coming into the close on the NDX as well as the NQs is more selling. The last few minutes, you did have some buying inside all the indices. I don't expect you're going to see the composite, the NQs rather, hold up. Right now we got, let me pull this up here for a second, 1 second. NQ, there we go. Okay, so intraday out here, what you have, it was a one-way, it's been a one-way shot all day. The first bid it caught actually was as soon as I got on the air here. That being said, we put this back a bit and okay, so 74.64 we're at. Yeah, this actually could get to 74.87. That'd be a good bounce, but that's where it could actually go because that's where the monster move was on the way down. We'll see how this shakes out coming into the close. That intraday, that's what you have happening. On the dailies, folks, bottom line, the market wants lower price. This is a slow razor blade cut inside the composite as well as inside the S&P 500. Composite itself, we are at down 63 points. You're at the 79.31. And anything inside, well, it's going to be interesting to see whether it saves itself. Anything really inside 79.23 gets you in the lower range. So, you know, and, you know, what you have here actually at 79, let's see. So you get 79 23 to approximately 78.67. So it has a longer way to go down to really get inside that lower range. Gold contract. What do we have with gold? Bottom line, gold contract. It got up to a price point today of $12 an ounce, and they start selling it off. We're at $12.0540 right now. We take a look at it. There was a big sell. Came in this at 11 o'clock this morning at 10.50. That brought gold from 12.10 down into this 12.02 number. End up hitting 1,200. It's trying to claw its way back. We'll see how that shakes out. Bottom line is that you didn't have follow through inside the silver market. Silver itself is trading flat out here. We're actually down 1/10 of 1%. What you did have in the silver market, it just never caught the bid. It was a sideways move all day. Bottom line is it didn't break a lower low, which is good. 30-year bond. So the notes and bonds are telling me that we are going to continue lower. You know, we're not only in the time of season that, you know, you can have this deal happen. We've had a huge expansion topside. What hasn't happened is that the note and bond market has not fallen apart. And that is in light of the Federal Reserve continuing to, well, bottom line is that I don't think they're going to change their mind. At the September 26th meeting, they're going to raise short-term rates again, 25 basis points. Well, what the market is doing, the market is saying that there's more demand than there is supply inside the note and the bond market. What we've done out here today is that you've done 248,000 contracts inside the 30-year. When you take a look at where we were on the 1st of August, you know, we were down at the 141 area. We do an expansion up to 145. You do a 50% retracement of that into the strength that was out there from the 10th of August, and guess what? You start taking off again. That's bottom line. That's saying they want higher price, lower yield. King dollar. King dollar volume's light, you know, and not to get the lower price, we do have a confirmed ABC structure on the way down. That being said, bottom line is going to need more volume tomorrow. You're not going to get it today. Right now, we've only done 16,000 contracts. You are down, you know, 109, but bottom line is going to need a lot more volume. We need about 24,000 and over as you're moving into lower price. The culprits out here today inside the NDX 100, the chips are getting smoked. You get Clack, KLA 10 killer down 10% or $12. You got Micron Tech down 8.9%. 440. You get Lam Research down 6.6%. If I go over to Clack, we take a look at Clack. This was one big number, folks. I mean, you talk about going south. This baby opened today at 118 and just went south fast and furious. 106.79. That's where we're at. Lam Research. If we take a look at Lam Research is breaking out a bottom. It's a small, well, it's not a small ABC down. Your A point is 196. Your B is 166, $30. Your C is 178. That's going to give you a 148. Yeah, 148. A to B equals C to D. And right now you're at 160. The important thing about Lam to keep your head wrapped around too is this. Lam was one of the first chip stocks to basically come off its high. That was $234. That high was March 30th. The bottom line, down fast. These chips are in trouble. Stay right there, folks. Coming back with our man, Mr. Jason Path. We're going to be talking markets.
Hi, folks. Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials right now are up 62. You get the NASDAQ down 65. S&Ps are off 5.5. Let's go over to our man, Mr. Jason Path, as we do each and every Thursday at 20 past the first hour. Now, don't forget, folks, Jason kicks us off every trading day, 8:30 in the morning market kickoff. Great program. Jason also has a great newsletter. It's the Dutch Book, and you can get that at thedutchbook.com. Jason Path, what's going on, brother?
Hey, man, how are you?
Doing great, man. Yourself?
I'm doing good, man. Doing good. It's been a good week.
It's been a good week. We got some action. We got markets moving. Big
time. That's what they're supposed to do, man.
Yeah, that's what they're supposed to do.
That's
I
right.
like it.
That's
I like
right.
it. I like it. So what I'd like to do is this. You know, I got Jason's some of his charts up from his newsletter, and I want to start with the S&P.
Yeah, man.
So, you know, it's going to be intriguing watching this whole thing play out. So I see what you're looking at. If you can explain to the listeners, I'm looking at scenario 1, scenario 2, and scenario 3.
Yeah, so, you know, the S&P, you know, at some point, you know, there's going to need to be some level of pullback, right? And clearly we've been off a couple of days so far. You know, with respect to, you know, we looked at over the last few weeks some scenarios. We really came up upon the record, right? And were we going to bounce off that and reject higher price, move lower?
Yeah.
How deeply lower would we move? Would we move higher? Right now, we like the higher scenario. The pullback looks like 28.50. It looks like over the next 4 to 6 weeks. We talked about on the show, the 8:30 this morning show, really looked at volatility, and we compared what we saw in January, obviously heading into the February correction, the shape of the VIX, the intensity of the VIX. What we saw in January was the VIX really moved from 10 to 14. What we've seen over August was really, you know, volatility is up, but it's been stable. It's not the ramp up that we saw through January. So as we roll that through, you know, a model that indicates to us we're moving towards some type of pullback. To us, it looks pretty mild, 28.50, and then we'd push higher to about 30.18 by the year end is the current call. So it looks like we've not seen an indication on a technical perspective that tells us we've got something deeper lower from a correction standpoint. It looks like we've consolidated through what was a longer corrective phase, really dating back to February. We've moved past that high, which would be that moving higher, quicker scenario.
Sure.
We'll pull back to 28.50 and then push our way higher to 30.18, 30.20 by year end.
You know what's so intriguing, Jason and folks, is that when the S&P went topside, I mean, that's a real break topside. I mean, that's the reality. And right now it's trying to figure out, do I want to get back inside the range, right? You can see, like out here today, what we did out here today, actually, folks, even when the S&P was down 15, 17 points, as we come back and we filled the gap inside that S&P, we just hit the top of it, and it said it didn't want to be there anymore. So it's like pretty intriguing, in particular because of the way I would say that the NASDAQ is trading,
Right. Yeah, and it's kind of flipped. The tech is taking a beating, obviously, and there's more technical indicators in the NASDAQ that are negative than if you look at the broader S&P, right? Because the tech story has been challenged this week. You've got the regulatory scrutiny. You've got some folks like Twitter, Snap that are just, it looks to me like on a deeper slide for longer. Facebook, I think, still is headed to 150.
Yeah.
So, and the broader S&P, I think it's a better story, and it looks better from a technical perspective. NASDAQ's taking it on the chin.
Yeah, there's no doubt. I just had your Twitter chart up, and there's no doubt. It's pretty amazing. I mean, well, it would make sense that the charts look somewhat. I mean, Facebook has so much more money than Twitter, though. But guess what? They're selling both of them, man. They're selling both of them down.
Well, and folks don't, folks may not realize, and this gets, a little more of a traditional fundamental look, but the valuations, the PE on Twitter and Facebook are very different. Twitter is very extended up in the 50s and 60s, and there's just no real narrative really to support that. I was joking, but I'm kind of serious about it. If I was to write, and we're far from year end, but kind of some rules, some lessons we learned in 2018. If you're a big tech company and you get called on Capitol Hill, you're going to move down 10%, right? Like I mean, that's not hard. And again, the market humbles us all. I'm sure the next time it happens, that won't happen. But I mean, we've just seen this movie before. And when Twitter got called, on the Hill,
yes,
it's like that's not going to end well, And we've seen, a decent move lower, but Twitter's position is tough because it's not just the fundamental piece of the Hill deal. Ultimately, that'll roll into the background. I don't think we're going to get some massive legislation to, regulate social networks.
Right.
But I think they're weak from a technical perspective, too. They're not growing. They're extremely extended on valuations. They've struggled to monetize. They've flatlined at 300 million users. And there's just no real growth story there that I see to support the valuation. I think it moves lower for longer, and Twitter's a pretty tough stock right now.
Yeah, no doubt. I want to talk with Tesla before you get off, but what I want to do first is go to, what do I just have up here? Bitcoin.
Yeah.
Bitcoin. Yeah, let's talk Bitcoin.
So we definitely saw a move, midweek this week. I thought we'd move lower. I thought we'd hold 67.50 better than we did. We're at 64.20. It looks like just a couple of large position unloaded on the market yesterday. Moved us down about 1,000. Volume's thin. That's always a risk now with crypto that, you just get a couple of positions unloaded and it can crash the market. We're stable at 65, which to me, or 64, next level of support between 64 and 65. I still like us working our way back up to 7,000 early next week. Structurally, the market is sound. The biggest concern is just the thinner volumes and the chance that something like that happens where you just get some larger positions unload on the market. But structurally, things are sound. I'm still, bullish longer term over the next 3-4 months. I think we get closer to 10,000 by the end of the year.
Yeah, and it's going to get intriguing here because, the way that this is traded the last couple of days, as we get closer to that bottom, you do one more trade like that, man, and that could be trouble,
That would be terrific, yeah, if you're a long Bitcoin.
I heard today on, I actually just heard this because I was just coming back to the office, and there's some kind of Bloomberg index that excludes Bitcoin. I think they pull it out of it. They put it in, then they pull it out. And the rest of the index, when they do the gauge as to where the other cryptocurrencies are versus where Bitcoin is, they were saying that if it follows, Bitcoin is going to be at 5,000 or should be at 5,000 right now. I found that really intriguing. It's like, okay, man, you know, but I think we know that a lot of those other cryptocurrencies, man, I mean, there's nothing there anyway, right?
That's right.
Yeah.
Yeah, I think that market had to clear. It's bleeding badly. Ethereum, second largest crypto, is just getting pummeled. But fundamentally, I think it's structurally bullish for Bitcoin. You know, it's a fixed market cap, fixed market space, fixed universe of folks that'll put money into crypto right now. And you know, to the downside, yet a lot of folks get burned in a lot of those altcoins. But I think that's more money ultimately rotating into Bitcoin.
Yeah, well, this is that whole deal. Once the ocean goes out, the tide goes out, right? You find the rest of them don't have a bathing suit on, right?
That's right.
And Bitcoin's last man standing. Here, stay right there, okay?
All right, bud.
Stay right there, folks. Jason and I come right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now trading up 71. You get the NASDAQ down 59. S&Ps are off 4.5. And if we take a look at this Dow, folks, what you're going to see, this is a remake of the last 3 days. You had a low out here today of 25,880. And bottom line is that you're 140 points off that number. that Dow Industrials wants to get up into that high, which is 26,167. We're talking with our man, Mr. Jason Path, who kicks us off every trading day right here, 8:30 in the morning. And one of the easiest ways to folks get all our programming right on your cell phone. You just go to YouTube, hit in the search bar, put TFNN. It'll come up. Just subscribe. It's free. All the programs come up. You'll get some great digital programming. Jason, I put up. You got a cool looking chart here, man.
Yeah, man.
And the chart I'm looking at is high yield debt tracks copper closely. Can we talk about this a little?
Yeah, man. Yeah, so we're watching high yield closely. Obviously, a proxy for risk tolerance, and in the market, risk pricing, really, where the market's pricing risk. And then copper is always, to me, been a very good proxy for economic growth.
Yes.
And so as the market looks at both of those fundamental indicators, we're seeing some divergence lately where copper's, and we all know that story very well through this year, copper has slid dramatically. But the risk pricing that has typically trended pretty well with that historically hasn't fallen in line. And so, my belief is that snaps back at some point, the market at some point will realize, just how much growth is left. Do we top out in the United States at 4 this last quarter?
Okay.
Internationally, what's out there? A lot of the copper consumption has obviously been due to global economic growth. If that slows down, how much risk tolerance, how much yield, how much growth is really out there? I believe that the high yield will move lower. That's fundamentally, bearish for risk appetite moving forward. Again, that's going to play out over the next few months, but high yield is overperformed in many cases, and I think overperformed where it should be, but that's also an indication of where risk tolerance has been. So I think it snaps back in line with copper. I think copper is a canary in the coal mine that global growth is ground to a near halt. A lot of that's China, but you see what's going on in LATAM. Europe's been flat.
Sure.
Where's the growth?
It's intriguing too. It takes a while for basically if things are slowing down. I think first, and I'm just from a personal perspective, folks. What happens is that whatever you're doing, whatever type of business you're doing, what happens is that first, you just feel like, okay, geez, it's good. I got a break. Then it's like, okay, hold it, man. I have too much of a break. then it's like, oh, is everything slowing down? Do you know what I'm saying? Mm-hmm. And it seems like that they can come in increments of 2 or 3 months at a time. Basically, so it's going to be intriguing because this is a good-looking chart, man. Because one's going to get straightened out. That's what this chart comes down to, right? Whether it's the copper or the high yield. Yeah, exactly.
The other side of the bet is, copper snaps back. And again, these are longer-term trends that play out. Copper snaps back. I think we're in for a multi-year deal with China at this point. I don't see either side budging. China was already slowing. Again, a huge consumer of copper. Europe has been tapped. LATAM has got years to work out what's going on economically down there. I don't know where the growth comes from outside the United States, but I think most folks would say, and I certainly agree, that 4.2 is about the max, and it's going to run a little lower than that from here on out. And this is a trend that, as the chart indicates, except for the taper tantrum, which really distorted the high yield situation, the bond situation there for a year or so. This is a correlation that runs very strong. You can take it as far back as you want. High yield and copper move in tandem. One of them's got to move, and I think high yield and as a proxy for just risk appetite moves lower as we rotate into the end of 2018, early to 2019. I just think you're going to get to a point, and I don't think this is rocket science. You just look at valuations. Where's the additional growth coming from?
Yes.
Unless you're Amazon or,
I can see that.
It's just it's a slow growth world right now.
Yeah, and what's intriguing when you just brought up the GDP for last quarter, folks, 4.2. There was some numbers out here this morning, because they're talking about after today, folks, Trump can put 200 billion, right? No, 200 million. Billion? Hold on. Billion or million? billion. Oh my God. On China tomorrow, as soon as the clock strikes 12 tonight. And an analyst was on, and he was talking about the soybean farmers. They're going to be, they've already got hurt the most. They can get hurt more. But what he was saying was interesting. He's saying he thought that some of even the 4.2 had to do with.
They pulled it forward.
Yeah, what had happened?
Exactly.
China was buying huge amounts, right? So, yeah.
Herculean. Yeah. So when you control for the tax cuts, which are meaningful and material, but a one-time effect,
right?
And you control for the pull forward, yeah, you're down. Into the mid threes, and that's our best quarter of the year,
right?
And probably our best quarter for a while. So yeah, even the United States, which is led, and we're seeing a lot of inflows from all over the world with the currency situation, et cetera. There's just not a lot of growth out there to be had right now, and placing bets on growth, you just really have to do some work to convince me what sectors those are. Again, outside of like Amazon and a streaming company or something, I just it's hard to see where that growth comes from, and that's again, to me, part of the metals story, part of the more of the global macro story right now. And I think you're going to have a correction lower in high yield and other risk-based assets due to that over the next 3 to 6 months.
Sure. So let's go into the oil market because this oil market. You talk about the consolidation, folks. Okay. Bottom line, 3 days we're down from 71.40, right?
Yeah. So we had a decent draw, and each EIA release day on the 8:30 show, I'll put out my forecast, and I saw 2 to 3 million. I think I said 30% chance of 3 to 5. So I wasn't surprised by the draw. I was a little surprised by the market reaction. I thought we'd get a little bit of a lift into the higher 60s at least off of that. What we have going through September now is the seasonal turnover.
Right.
The refineries are preparing for winter, and so we'll have a significant drop on throughput through the refineries, which means a build in inventory seasonally speaking over the next few weeks.
Okay.
So that I think the market was just looking for a much larger draw, given that they know the next 3 to 4 weeks we're at risk for it to start building again. We're right at 400 million barrels, which I've talked about as historically large level. We've just never before the last few years had this much oil in storage. If we start building off 400 million, where we are on price, again, my call is still out there, $55 by the end of the year. I think we continue to move lower. Iran, we got oil numbers for August. Iran's off about 250,000, but some of the other Middle East countries are up. Saudi's flat. United States is flat, but we're at record levels. Russia's going to be up. So we haven't seen just a complete drop-off in Iran yet in exports. So, if we get a couple builds next few weeks, we could be headed to the low 60s.
Gotta love it. Listen, folks, right here tomorrow morning, 8:30. You just heard our man, Jason Path. Great show, great analyst, great data. Jason, have a great one. Have a safe one. We look forward to the show tomorrow.
Thanks, Tom. Can't wait, man.
Thank you. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Dow right now is up 47, Nasdaq's down 65, S&Ps are up for 6.5. Let's go inside the NDX. So NDX out here today is basically taking it on the chin. Well, first off, we'll do the positives inside the NDX because you got a couple of positives that are up pretty good. You get C-Trip up 5.5%. JD.com's up 4%, but JD.com was down 8 yesterday. Workday is up 2%. That was also down 10 yesterday. Netflix is up 1.7%. Now, taking away from it, the chips. You have Clack down 10.5%. Micron's down 9.5%. You get Lam Research down 6.5%. So if we get into Clack first, we take a look at KLA 10 Core. You're down $12.5. This is a vicious move in one day, particularly because this has been consolidated now since June of 2017. So you got basically 14 months of consolidation. When you take a look at this, what you're going to see here is this. This is a classic high that has stayed up here for a long period of time, then it falls apart. What you're going to see is this. If we put channels up to the top of the consolidation and then down the bottom, what you're going to see is that all the volume here has been down at these swing lows. $96, that's the swing low from February. That's where it's going after. That's that infamous February 9th day, folks. This is the next one that's going down into that area. Now, the kick is going to be this. If we break that area and break down, then this is big trouble, because then you're talking about an $80 stock. If we take a look at the let's go take a look at Micron next. Micron is off 10%. This is breaking out a bottom. This is an ABC down. Okay, so here we go. So your A point is 58. Your B is 45. So you get 13 bucks. Your C is 53, which is 40 bucks. You're at 44.80 right now. So let's see what's here. Okay, same type of setup. This looks like it actually wants to go to 37. So this is quite a breakdown also. And the danger inside these two right here has been the long consolidation that has been out there. This one here, the consolidation has been going on for 10 months. And then Lam Research, LRCX. The reason Lam's important is not because it's down to $11.5. It's because Lam Research was the first chip stock off its highs, and the chips, the sector, folks, that took the NDX 100 as well as the NASDAQ composite, not up to these highs right here, but that from March of 2016 going all the way over to March of 2018, the chips are what brought the NDX up in a big way. Then what you had Lam Research come out with basically numbers that didn't fly in the marketplace. Lam, you know, basically the first sell down went from 219 down to 175, couple weeks. It rebounded, then it goes from 218 down to 156 in 3 weeks, rebounded again, and this one here, guess what, folks? 234 or at 160. What I've seen in the marketplace, this is what's always so wild about the market. The market seems to always give you, in this case you see 3 times, the market gives you 2 or 3 times to get out. It just does. Now the deviant part about that is that it's like, guess what? You're going higher. Why am I going to get out? Well, bottom line is that what Lam is showing, and this is going to be the, you know, today we hit $159.99. What's been sticking out here? Same infamous February 9th day. 156. Right now, you're 4 points away from it. We're going after it. You break 156, Lam will be down at like $102. So there's big numbers out here that are going down fast, furious, and all of the above. Small caps. Let's go take a look at the small cap market out here, the IWM. Now this is going to be, this is subtle. There's no doubt. What you do have happening in the IWM right now is that you are getting an expansion of volume. You know, we had come down with volume on Tuesday. Yesterday, bottom line, you rejected lower price. So it had the shot today to do something, and it tried, okay? The high of yesterday was 172.23. You got to 172.48 today, so what that's going to be, you're coming into the downdraft from Tuesday. You're going to have lighter volume, and you're going to have a failure on price. So what that sets up that you're going to try to get back inside the $170.20. You get back inside that level, guess what? Then you're talking 162. So there's a lot of moving parts right now. Most of these moving parts, folks, have to do with lower prices. We go take a look at those SMHs, and what you're going to see is this. So picture the, well, here, I'll do it this way first, because this is pretty cool. If we go to CLAC, KLAC, and you put up the largest owners of CLAC, what we're going to see right here, okay, so I'm going to first put, well, there we go. So Wellington's, I'm going to first put, I want to see who the sellers are first. Okay, so there you go. This is a big number. This is a big heads up also. So as of the 30th of June, this is the last filing for the 13Fs. You had Wellington selling. They sold 1.7 million. They had 8 million left. You had Fidelity selling. Fidelity had sold a third of their position. You have American Century sold almost all their position. This is a problem child. This is a big problem child. Let me see the buys. T. Rowe Price, I'm sure they're not happy right now that they were one of the biggest buyers. They own, at the last filing, they own 8.7 million shares, or 5.6% of it. These other companies that, you know, you see a couple of mutual funds, you see Invesco, bottom line, folks, is that they're, number one, they're going to be sellers out here, and the real question is going to be, have they sold quick enough to keep those profits in place? Because, you know, all of these equities really have been up there for quite a while. And then if they don't, this is what ends up happening, and this is my point more so than anything, is that this is when selling can go from one sector to a different sector. Because what ends up happening when you get a day like, you know, yesterday the NDX 100, flat out, you know, the FANG stocks, okay? Then you get the chip stocks today. Money managers in general will turn around and say, okay, hey, man, I'm taking some money off the table, because guess what? We only have 90 days until the end of the year. I'm doing fine. I'm not going to give it up. I get paid on what I do. End of story. Facebook's down 469, 162. Facebook's heading for that high volume low of 149. We go take a look at Twitter. Twitter's the same type of setup. Twitter is down 189 at $30.89. That's heading for that $26 level. You get a lot of selling out here. That's the bottom line. Our phone number is 877-927-6648. Dow up 44, Nasdaq down 68, S&P's down 7.5. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow Industrials right now are up 39. You get the Nasdaq down 69. S&Ps are up 7.5. Inside the Dow Industrials, let's just see who's pushing some strength in there today. So Boeing's putting 33 positive points, United Health 13, Visa 13. Taken away from it, Apple. Apple minus 24 points, Chevron minus 23, Goldman minus 16, Exxon minus 5. Let's go over to Goldman for a second. So Goldman's trading down 246. Yeah, this is, you know, talk about a long consolidation. So this has been in a consolidation basically, wow. This has been a consolidation since January of 2017. This is in trouble. This is going to go back and try to test the swing low of 219. We'll see how that handles there down at the 219 level, but that's a big number. Apple, we go take a look at Apple. Apple down 355 today. Amazon, and these are the culprits. Amazon's down 35 bucks. These are the culprits. Apple and Amazon are the culprits inside the S&P. Right now, they make up 8% of the S&P 500, which is pretty wild because, you know, you're figuring you get 500 stocks. We used to talk about this quite a bit inside the NDX 100 when Apple was at one point of about 14.7% just of the NDX 100. I'll have to check out what it is now. But bottom line, makes a difference. You get these big tech stocks going south. They've had an amazing run. It doesn't take much to go the opposite way. Google's trading down $13.50 at $11.73. Google's actually looks like it wants to reject lower price out here. It was down $34 earlier. You know, we got down to a price point of yeah, it was down $34, $11.52. Rejected that level, so it looks like Google wants to stay outside. Yeah, see, well, this is what happens. Google's trying to get back inside its lower range, and most of the time, your first leg down, you know, bottom line, you get a rejection. Stay right there, folks. We'll be coming back with some numbers after the close. We have the Dow Industrials finishing up 37, Nasdaq down 68, S&P's up 7.5. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have. It's a beautiful thing. Look at our man, Jim from Minneapolis. We're going to take it by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay. And
it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But holy, I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't make assumptions. Communicate with clarity. Communicate with others as clear as you can be to avoid misunderstanding, sadness, and drama. If all humans would communicate with impeccability of the word, all our relationships would change. There'd be no wars, no violence, no misunderstandings. Market-wise, let's take a look at it out here. We had the Dow Industrials up 20, Nasdaq down 72, S&P's off 9. Big numbers inside the NDX 100, as well as the composite. You had the Nasdaq composite down 0.9%, S&Ps are off 0.3, Dow Industrials basically flat. Gold contract up $4.30, trading at $12.0560. If we get open, we take a look at that gold market. What we're seeing is this. Bottom line, this morning, 8 o'clock, gold caught a nice bid, gets up into the price point of $12.12, and guess what? Didn't take long for it to actually give it up. It was actually a couple hours, but bottom line is that it hung up there, got up to the 1212 level. About 11 o'clock this morning, it got sold down from 1209 to 1200, made its way back to 1205. You've done 277,000 contracts. The good news is that, guess what? You're in the higher part of where we've been. I mean, the low that was established a couple weeks ago is 1167. And we'll see how it's going to attack the 1220 level. What you do have happening, this is a short week. We're coming into Friday. The way that the dollar is trading, if we go over to the dollar for a second, it looks to me like that dollar could get a bounce tomorrow morning. And this is why, folks. So the dollar is in a confirmed ABC structure on the way down. We went down 169 ticks out here today. Your volume, however, contracted dramatically. We did 17,000 contracts, I think. Yeah, 17,000. So we come down yesterday with 24. You did 17. And what has happened is this, is that I can bring this actually all the way back to May 29th of this year. And there's only one time that actually we had follow through in the dollar and the consolidation that had taken place from May until the break topside on August 30th. That says quite a bit. So we'll see where this shakes out. You know, each and every time. So on a short-term basis, it looks to me like coming into a Friday, we could get a bounce tomorrow morning. That wouldn't fare well for the metals market also. Now, that being said, I don't think this is going to get above the 95,680. That's where it's been sold off on a continual basis the last 2 weeks. And what's given me that, and this is where there's some divergence out here, is notes and bonds just continue to want higher price, lower yield. The 10-year yield out here today is 2.877. What that's all about, of course, is that when you have that 10-year note pushing higher, yields go lower. And when we take a look at this, you know, you go back to the August 1st, you're trading out here at 118. That's when the 10-year was 3.11. You're at 2.87. You know, you'd run up to the 120.20 mark. We're at 120.05 right now. Bottom line, they want higher price, lower yield. There's more demand than there is supply inside that market. Some of the volumes we did out here. Let's go take a look at the indice volume first. Inside the indices, we did about 800 million. Inside the NASDAQ composite, we did 2.34 billion. The NDX 100, you got volume on the way down. This is the, yeah, they actually expanded too. So the Qs were down $1.64. You're trading out at a price point of 181.81. Now, what that just did, folks, also, is put the Qs inside its lower range. That sets up, guess what, that you can actually trade down to 169. Right now, we're at 181. Volume expanded. Volume yesterday was 42 million. We get 45 today. The SPY, the SPY, we take a look at the SPY, see how that's baby setting up. SPY also down 87 cents. You closed at 288.160, and 286 looks like it's going to make the run for. The SPY did volume out here of a 63 million. Yesterday we did 72. But bottom line, that is an expansion. Well, it's not an expansion of volume today, but it is high volume. You got to remember, we made a high inside the SPY with 61 million. Come down yesterday with 72. Today 63. Small caps. The IWM. We take a look at the IWM. IWM out here down $1.16. 16 million shares traded. This is subtle, but this is telling me it wants lower price also. 170. So the IWM 170, no, 170.20, $170.20 will get you inside the lower range. We take a look at the oil market out here. Oil bottom line rejected higher price out here on Tuesday, came off that high, had volume on the way down, had volume out here today. We've gone from $71.40 on Tuesday. You hit a low today of 67. You have 609,000 contracts behind the move. That's saying that oil market is making its way down to the bottom of this consolidation, which is $63.72. If we go take a look at the XLE, XLE followed through to the downside today with an expansion of volume. You're down $1.37. You're at 72.81. You have a high volume low out here at 71.70. And it's possible that the XLE is on a much large a mission to get down into this $64 level. The reason I'm saying that is that when we came down on the 15th, you had huge price spread, huge volume, and you broke the whole consolidation. So when we just take the bottom of the consolidation, which is that 72, take the top of it, which is 79, you can say, okay, 65 is coming at you. You just take the 7 points off the bottom of the consolidation. 65 is laying out right at the low from April 2nd. And that's the way this whole baby seems to be setting up. And in fact, oh, this is wild. You know, it's still sticking out here. This is where we're going. What's sticking out here, folks, is the high volume low from February 9th. That's $64.45. That's your number. And if you want to see stock going after the high volume low from February 9th, Lamb Research today was down $12. You're at $160. This has been sticking out here also. $156.83. We came within $3.10 of it today. You had an expansion of volume. This is going after that high volume low. I suspect we're going to go after it and hit that baby tomorrow, see whether it holds. To recap, we had the Dow Industrials up 20, NASDAQ down 72, S&P's off 9. Come right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow Industrials finished down 20, finished up 20. NASDAQ down 72. S&P's down 9.5. Let's go and take a look at the SMHs. So SMHs today, they led the NASDAQ as well as the NDX 100 to lower price. You have the SMHs, that's down $2.83. You're trading at $106.30, and you can see the volume exploded out of it with 9 million shares inside the SMHs. If we bring this back, we take a look at it, you're going to see this consolidation's been in place for approximately 11 months. November of 2017, this baby started. Now, what's going to be intriguing watching the SMHs is this. The number 105.83. We're right next to it right now. You're basically 50 cents away from it, 47 cents away from it. That would put you in the lower range. And what is happening out here, which hasn't been tested, is also that February 9th high volume swing low. That high volume swing low February 9th is $93.88. It's going to get tested. That's the way these high volume bars like to work. Some get tested before others. The bottom line is that when you get a high volume low, and if you just want to see just how bizarre this is, and even what type of bounce you can do, all you have to do is actually go over and look at Lam Research, because Lam was one of the first chip stocks to fall apart. The first time that it, basically fell apart was almost a year ago. It was November of 2017. That's when it came off the high, and in 1 week it went from 215 to 180. The following week it goes down to 175. Then guess what? It shook it off and almost got up to a new high. Just missed it at 218. That was in January of 2018. Went downtown very quick, 218 down to 156. So you're talking what, 40, 50, 60, yeah, 64 points in 3 weeks, and then it makes a new high. It shakes that whole deal off, makes a new high, but this is the point. February 9th, high volume low, so picture this, you're 156. 5 weeks later, you make an all-time high of 234. So you go up 75 points, right? Well, now you're down, you're down, what, 234. You're down 75 points off the high. You're going after the high volume swing low. And if we do break this high volume swing low, it's going to get down there and test. We're only 4 points away from it. You break that, and then you got big problems, And it looks to me like it should have, the first time down here, it should have some support. And it's not going to be from the high volume low it's going to get the support. It's going to be from where it actually traded in June of 2016. June of 2016, you had a good, about 15 weeks that you traded approximately at those levels. So what I do expect, number one, I expect we're going to be down there. Number two, we'll find out what kind of support they have at that level. We go take a look at some of the FANG stocks out here. Facebook, Amazon down 36 bucks today. You're trading 1958. So in 3 days, this is yeah, well, down 100 bucks. That's still only 5%, but that's still, well, guess what? Amazon was actually traded here 6 days ago. Now, the way Amazon is set up, let's take a look at Amazon here. So, Amazon, I'm going to put this on a weekly. Okay, so on a weekly, what it's going to set up is that we're going to have a higher high. You're going to probably have lighter volume. Well, 1880. 1880's game. If we break 1880, then you're going to get quite a correction here. What Amazon has not done, Amazon hasn't corrected since April of this year. That's when we went from $1,617 down to $1,352 in 4 weeks. When Amazon corrects, man, it likes to correct. So here, watch this. If we actually just take and say, if you have a normal correction and a bull market move, your first correction, a 0.382, and I'm not taking this from the beginning of the trend. I'm taking it from just the last straight line move, which is from April. That would get you 1,700 and $82. That's a 0.32 retracement. If it's a 50% retracement, you're talking about $1,700. And if it's a 0.618, you're talking about, I can't, let's see. There we go. No, you're talking about 1556. So bottom line is that there's more downside than upside right now. Facebook came down with volume today. That was down 465. What's going to be intriguing with Facebook, now watch, let's look at Facebook for a second, because what you have with Facebook is that you hit a high 2 months ago at 218 bucks. You're at 162. This also is going after the 149 area. If we break 149 with Facebook, you want to hear something that's really wild? If you break 149 with Facebook, Facebook can go to 63 bucks. Let me bring this back further so you can really see this, how this is set up. Yeah, it's because Facebook went straight up from $63 in April of 2014, and it really didn't have any nice volume spikes. It was just steady as she flew. The bigger volume spikes had to do with the correction in March. That's the first time Facebook went down, 195. 2 months later, it was at 149. And that's how that baby's set up, and that's what's actually so dangerous about it. Twitter came down hard out here today, as well as yesterday. And let's see, did we break that swing yet? 3107. Yeah, we're below the swing. So we're 3081. That sets up 26 bucks. Netflix. Let's see what NFLX, what Netflix is doing out here. Netflix today was up 5 bucks. Netflix is in trouble though. Yeah, Netflix came down $35 yesterday, goes up 5 today. Netflix is building cause for lower price. Google, we take a look at Google. Google made a comeback today. Google had hit 1152. You closed at 1171. It's not necessarily a rejection. What you did have with Google is this. So check this out. About 20 minutes before the close, it doesn't seem to be set up the same way. It looked like about 20 minutes before the close that you actually could get a rejection of lower price, but when I look at it right now, it's not. You're down, you have some juice on the way down, you get volume on the way down, you get all of the above. Some of the other higher volume equities, oh, here, let's go to the marijuana stocks, because what you did do is that Telray, which is has been on fire, and this is a stock we're talking about that you don't want to get close to. That baby today, volatility, this was like volatility in spades. So this was down 11% today. But if you take a look at it, what you're going to see is that it opened at 85, dove down to 76 in a heartbeat, and then came all the way back up to 88. And then from 10:30 this morning, it just sold off once again. Stay right there, folks. Come right back.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow finished down 20, Dow finished up 20, Nasdaq down 72, S&P's off 9.5. Tomorrow morning, folks, 8:30, going to get the jobs numbers. We had some ADP numbers come out this morning. They were a little light. That being said, unemployment is at one of the lowest places it's been almost since the 1960s. So a big number there. Now, it looks to me, I suspect that this job number is going to probably come in light tomorrow morning. Also, we'll see what the market wants to do with it. But what we do have out here right now is that these markets, and I was talking about Asia yesterday, what you had last night, bottom line, Asia still continued low. You had the Hang Seng down 1%. You had Shanghai down 0.7%. If we go over to the Hang Seng and take a look at it, what you're going to see out here, you were down 269 bucks yesterday. You're breaking out the lows. You know, the last 6 months, the high has been 32,000. You're 26,900 right now. So you're bottom line, you're getting down into lower prices. And this is a major break. I mean, you know, we're talking about 33,000 was in February, and you're 26 right now. You've made another leg down. It looks to me like 25,000's game. Let me bring this back a little bit further. Yeah, and this is, yeah, easy. This is in trouble. And what you're going to see because of that is that there are plenty of Chinese stocks that now are trading inside of our markets, and it makes a difference. That's the real bottom line. We go to the Nikkei in Japan. We take a look at the Nikkei. Nikkei out here, that moved down 92 bucks last night, 22,487, and this is where there's going to be really cool divergence and how this is going to play out. And what it is this: if we go over to the yen for a second, what you're going to see is that there's a slow creep into higher yen, and the Nikkei cannot stand higher yen, folks. The yen out here today went down 79 ticks at 110.74. Now, the cool thing about this, and this is going to be kind of wild watching this shake out, because, well, the cool thing first off is this. When the yen gets stronger like this, gold gets stronger, okay? The gold market, bottom line, corresponds pretty quickly when that yen goes south. And what I mean goes south, when you get lower price in the yen, means it's stronger. The Nikkei goes crazy. It's unusual that you get the yen movement like we have got out here today. You know, we had the yen move at. This just happened. This is interesting. You know, it had moved down. When we closed at 4 o'clock, well, at 3:30, the yen was at 110.95. We went down to 110.53. Fast, furious. That is telling me that tonight we may get some nice action inside this gold market once again. And here's where the divergence is. The divergence coming into tomorrow morning is going to be this, is that the dollar index pulled back, and as a pullback, it needed more volume on the pullback. Didn't get it. Yen comes lower, has the juice behind the move. One of them is going to win tonight, and we'll see what one is going to win. And we'll find out pretty quickly, too. The way that the Nikkei is set up, and this is where, you know, if you look at the currencies, if you get the corresponding indice of the currency that's going to move, meaning in this case, we're talking the yen and the Nikkei, this Nikkei come down with volume. This Nikkei wants lower price. So that's telling me, number one, that the yen does want lower price tonight. And if that's what we get, then we're going to have a little field day going into the weekend inside the metals market. And thus far, of course, we haven't had any bids. If we go look at the GDX, GDX out here, no bid out here today whatsoever. You're actually, you had 43 million shares, and you're actually pushing into low with volume. This is a problem child. XAU, let's go take a look at the XAU. XAO pushing into the low also. I suspect we probably had some volume too, because what you did have, well, actually, yeah, this is going to be kind of cool watching this shake out, because $63.14. Okay, it's closed below it anyway. Bottom line, yeah, XAU pushing into the low. Gold Bugs Index. Let's take a look at Gold Bugs Index. Yeah, that went to a lower low, I believe. Yeah, 135.37. That's a lower low from last 3 days. What you have? Let's go to Tesla. So Tesla, Elon Musk, he's got big problems all over the place. Tesla today was flat, $280.90. That being said, it had made it up to $291. And then, bottom line, just gave it up once again. Tesla's building cars to trying to get down to this 244 level. He's going to have so many suits on his hands. Another one that just got filed today. Let's see. There's two of them. 1 second. Yeah. So you got Andrew Left, who is the founder of Citron Research. He's a big short seller. And he's got a good, decent history too, by the way. Valiant Pharmaceutical, his quote was that's the pharmaceutical Enron, and sure enough, it didn't go out of business, but it was a pharmaceutical Enron, no doubt. So let's see what he says. In his lawsuit, Left seeks to represent a class of investors who traded Tesla shares from August 7th to August 17th. The suit cites Musk's long-standing public feud with short sellers, claiming he manipulated the price of Tesla securities to hurt such investors, and in doing so damaged all buyers of the company's shares by issuing false and misleading information. The alleged scheme started August 7th, according to the complaint, when Musk tweeted, "I'm considering taking Tesla private at 420, funding secured," and another tweet in the same day saying investor support is confirmed. Only reason why this is not certain is that it's contingent on a shareholder vote. We know the rest is basically history, folks. The rest is that he walked back everything. And guess what? This is going to cost them a fortune. I mean, just an absolute fortune. The mind blowing. I'm curious as to how many shares Musk actually owns of Tesla. I believe it's quite a few. Yeah, it is. So he owns 19.7% of Tesla. He owns 33.7 million shares. And if we take a look at the buyers versus sellers, look at that. Fidelity is a big seller last quarter. So Fidelity might be out by now. So Fidelity had sold a quarter of their position. Yeah, quarter of their position on the last filing. We'll see how they where they stand right now. But big numbers, no doubt about it. No doubt about it. Some of the higher volume equities out here today, and we had volume across a lot of these indices, a lot of these sectors, big time. You had Rite Aid was down 11 cents, GE was off 5, Twitter was a big one, of course. Ford Motor was down 6. You had Ma Bell was up 16. Applied Materials, oh interesting, that was down 5%, $2.25. You had Wells Fargo off $1, $57.92. Stay right there, folks. Come right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Tom O'Brien.
Welcome back, folks. Let's go take a look at GameStop. GameStop closed today at $16.14. The low for the year is $12.20. The high is $20.96. They are trading right now at $15.68, and let's see what they had to say number-wise out here. So, let's see. Okay, so second quarter, oh, look at that. New software sales down 18.5%. Hardware sales were up 20%. Net sales, this is how these are shaken out. So The estimate had been 1.6 billion. They came in with 1.65 billion. Bottom line, market's not happy with that, though. Comp sales, not bad. The comp sales, they expected to be down 3.1%. They were only down 0.5%. They see full year. Right now, the range at full year had been $3.09. Now they see $3 to $3.35 earnings per share. And they see comp sales being flat. The estimate for the year, however, is going down. They expected to make 8 cents. Now they're going to make 5. You talk about a volatile stock. Look at this, folks. Since 2 weeks ago, it's at $17.27. 3 days ago, it's $13. Let's put this on a little longer basis. Oh, I see. Holy cow. I haven't looked at this stock in a long time. So, GameStop, folks, wow. This is pretty intense. So, topped out in 2007 at 63 bucks. Crashes like the rest of the market down to 16. Goes sideways for a couple of years. Does a nice big bounce in 2013 to 57. And just gives it up again. It looks like the way this is trading that we're going to see, you know, bottom line some, well, 1220 wants to get tested once again. So we'll see how that shakes out. Let's see what we had happen with, curious, if I put, so Delta Airlines was down 77 cents today. Interesting. It came off the high with volume yesterday. High-end consolidation, couldn't handle the high-end consolidation. Okay, so we're at $56. Let's see what we have here. This was, I don't know if this was today or what. Holy cow, this is dangerous. Okay, U.S. safety regulators are investigating an engine failure on Delta Airlines that forced pilots to shut down the turbine and return to Atlanta shortly after takeoff. The accident occurred yesterday. It was a 757-200 bound for Orlando, Florida. It had 121 passengers on board as well as 6 crew members. The engine failure occurred at 18,000 feet. Man, oh man. Could you imagine, folks, that you're up at 18,000 feet and you lose one engine? Well, at least they didn't lose 2. That's the bottom line. Wonder how they... Okay, so let's... we'll go on here. So the Delta incident is at least the 4th since August 2016 in which an engine failure has allowed debris to escape. The power plants are designed with a hardened exterior so that even in the event of a blowout, fan blades and other components can't get out and threaten fuel tanks, passengers, and other sensitive airline structures. Flight 1418, that's the flight that had lost it, experienced a mainframe issue in the right engine shortly after takeoff. Anthony Black, a Delta spokesman, said in the interview, once they have, well, it just says now, yeah, it's just an investigation. The agency is also investigating other cases in which engine failures allowed debris to escape. A woman died on April 17th on a Southwest flight. The Boeing 737 lost a fan blade which careened in front of a protective shield and tore off in the front of the engine. After the debris broke a woman, the woman was partially sucked out of the airplane. Man, that's so sad. Yeah, you got them. Let's go take a look at Boeing for a second. So it didn't affect Boeing today. Boeing was up 459 all day long. That they were just buying Boeing. If we do take a look at Boeing, this is also a high-end consolidation. These high-end consolidations that have been going on for approximately 11 months to a year and a half, folks, a little problem childs. The reason is that what you get is this. You get the aspect of going sideways at highs and a large consolidation. And when you look at this large consolidation, what you're actually going to see is that each and every time you try to get to a higher high, the volume dies in the vine. Each time you're at the lower end of the consolidation, the volume explodes. When you get channels that are set up like that, what tends to happen, or what does happen, you're going to get a breakdown. You're going to get a breakdown to the bottom of those consolidations, and then we'll see where those babies shake out. So let's see what we're saying here. This is quite an article as we're talking about selling. Executives sold more than $10 billion. This is insiders now, insiders and corporations. They sold more than $10 billion worth of stock holdings in August. That was the most since November, according to TrimTab's investment research. Yeah, I'll show you this chart. It's a pretty cool looking chart. That's a lot of selling. You know, bottom line is that you can look back in November and say, yeah, they sold off in November, and it wasn't a big deal, and it wasn't. Bottom line, we'll see whether this is a big deal or not. That's how this thing is shaking out. One of the questions in the den is that do I expect some good action in the metals with the jobs number? This is where the divergence is inside that. Not the jobs number. I expect what we're going to see is this. The ADP come out today was a little light. I expect the number to be light. What we do have going for us, and I don't think it's going to be the jobs number, Mike, what I think we're going to see is this, is that we're going to get a good indication in the metals market what the metals market wants to do at about 9 to 10 o'clock Eastern Standard Time tonight. The reason I'm saying this is that we got movement inside the yen out here today, and it was late movement inside the yen, but they were driving the yen into stronger yen dollar, 110.66. So when you take a look at this, it's like, okay, that's telling me we want to run down to 109. If we break 109, you get action down to 108. And if we pull this back, what you're going to see is that there's a direct correlation between the stronger yen and stronger metals market. And the way it looks to me, I like how this yen is set up. This yen is set up, you know, to get down into the 109 area first. You break the 109, and then you're going to get big action. You break the 109, you're talking about the 108. You know, I know we're only talking pennies here, folks, but those penny movements inside the yen correlate to big numbers inside the gold contract. And what you can see is that when gold topped out in April, bottom line, the yen start going higher in March 26th. And the last time that we got a bid on gold was April 4th. So you can see it's a direct correlation. And what I do, the way that the yen is set up, the way that the Nikkei is set up, Nikkei looks like it wants to get down to, that's what I think is going to win over tonight versus the US dollar. Because the dollar needs more volume as it goes lower. Stay right there, folks. Come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great bright long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. With over $56 million in cash and over $66 million in working capital, Great Panther Silver is positioned as a company with a solid foundation and poised for growth. While completely unhedged to the price of silver, Great Panther retains 100% ownership in 2 producing mines in Mexico, which is the top silver producing country in the world, along with future potential production in Peru. Great Panther is highly leveraged to the price of silver, and after a great year of performance in 2016, Great Panther Silver has a strong outlook for 2017 as well. With good liquidity in trading and strong fundamentals on the balance sheet, while remaining completely unhedged to the price of gold and silver, now is a perfect time to take a closer look at this equity. If you'd like to find out more about Great Panther Silver, then go to greatpanther.com or check them out on the NYSE market, symbol GPL, or the TSX, symbol GPR.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Let's go over and take a look at the financials as we wind up this hour. So the XLF out here today, down 13 cents. Bottom line, you're still at the top of the range out here. The top of the range being at 28.45. We're at 28.36. Berkshire Hathaway, BRK. Now, this is still the largest weighting structure inside the financial sector. That is going after its swing high out here of $213.36. That was generated out here 6 months ago. It looks like we are going to go after that. Yeah, we're going after that. JP Morgan, JPM. So it's intriguing that that was down with, so JP Morgan was down 49 cents. Volume's not bad. Bank of America, BAC, down 18 cents. No big deal there. Wells Fargo, it's hard to believe that, it doesn't matter what Wells Fargo does. That's down $1, $57.93. Yeah, I guess that's way off its highs. The high was 66. Yeah, you're still under the $60. Under the $60 inside that Wells Fargo still sets up lower price. You get the jobs number tomorrow. I expect you're going to see basically the jobs number come in a little light. Unemployment is going to be one of the lowest we've had out here, period. I mean, it's running about since 1960s. Market-wise, what I expect we're going to see out here, the NASDAQ, NDX 100, S&Ps want lower price. Dow Industrials still look like they actually want to test the highs of last week. We're right next to them right now. You're at 25,995. That high was 26,167. So I expect you're going to see a lot more movement out here. The high volume tech stocks, the sell-off continues. The chips got smoked out here today, down 10% in a day. And what does happen inside the NDX 100, folks, that is an index that goes up very fast. It normally goes sideways for a bit, but when it starts heading down, get out of the way, which we have right now. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership, and fly with it. Thanks for being here, folks. Join us tomorrow morning, 8:30. Jason Path. Great show. Wow! Go get him, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.